This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview.
Joining us today for a special feature on Pozzolan and Perlite is Patrick Cheetham, the MD of Sunrise Resources. Patrick, good to be speaking to you again. How are things?
Yeah, very well, thank you. Very well indeed.
Well, thank you for joining us. I know we've done a special feature before, and now we'd like to sort of cover these two commodities, Pozzolan and Perlite. I hope I'm saying that the names correctly, but I mean, just tell us what those projects. I am good. What are those commodities, resources?
Okay.
What are they?
Sure. Well, there's a pozzolan by definition is anything that when you mix it with lime and water makes a cementitious material. Okay. So it goes back to ancient Rome and ancient Greece when they used volcanic ash as a natural pozzolan. But pozzolans can be industrial as well. So, the one of the pozzolans that's used is fly ash, which is from burning coal. So that's a pozzolan, but it's not a natural pozzolan. So we're dealing with natural pozzolans, so materials which have cementitious properties.
Okay.
So perlite, on the other hand, is a natural material which, when you heat it, it pops like popcorn. It expands and makes a very, very lightweight material.
Okay.
And so that has a series of industrial uses that take advantage of that low density and strength. And it's used in a whole range of things, from horticulture, where you see those little white beads in compost, right through to industrial fillers in wallboard and different things.
Okay, so fillers for like insulation purposes?
For insulation, absolutely, yeah. It's used in insulation in a big way. And particularly in these big cryogenic projects, you see these liquefied gas tankers, those big domes you see on the ship. They're all insulated with perlite.
I see. Okay, so it's really their industry materials used a lot in construction, but not exclusively construction, but a lot is in construction. Right. Okay, yeah. Okay. So, I mean, what's the sort of market like? Because people can understand commodities a bit more, like copper, of course, there's a market for that, gold, for instance, but these two commodities a little bit more unusual. So what is the market like? Does it have ups and downs? Is the demand steady? What are we thinking here?
Yeah, so, pozzolan is intimately linked with the cement industry and the ready-mix concrete industry. So that's the industry that it follows. So with natural pozzolan, what you're looking to do is to replace a certain portion of the cement into ready-mix concrete. So, and the reason for doing that is that, cement production is responsible for about 8% of global CO2 emissions. So the cement companies want to use less cement clinker in their cement blends. Ready-mix companies want to use less cement in their concrete blends. So it follows very much the health of those industries. But if you look at the cement demand in the US, it's about 130 million tons. In California, maybe just over 10 million tons. But these markets are forecast to grow at about around 10% year on year is what's forecast up to about 2030. And at the moment, natural pozzolan markets are quite small. The market for pozzolan generally, including coal-fired power station fly ash, is reasonably large. So in California, for example, it's about 2 million tons of pozzolan used, but only a small percentage of that is natural pozzolan. But that percentage is growing, and it's growing fast. So by 2030, we expect the production or the consumption of natural pozzolan in California to be about 2.5 million tons.
Okay, and you've of course got two projects here. I mean, what are we talking in terms of economics for projects? We'll get into some more detail of the projects in a moment and the stage they're at. But do you need a certain, is it scale, or the grades come into it, purities? What are some of the metrics that come into work?
Yeah, so it's dominantly the quality of the pozzolan. So what you're measuring really is how strong a cement or concrete will it make?
Okay.
So strength is the important thing. What strength does it have relative to concrete or to ordinary
Okay.
Portland cement?
Okay.
And so you measure that, but there are other parameters that are interesting as well and fairly critical. And one of those is water demand. So how much water do you need to put into the mix to make it workable? Because
Okay.
certain pozzolans are very absorbent and it makes a very dry mix, so they have to put in expensive plasticizers.
Okay.
But what I can say is that our CS pozzolan, when it's been tested against a whole range of different natural pozzolans, is probably one of the best around in terms of when you look at the combination of strength and water demand. So
Okay.
it's very high quality.
So it's not a commodity that you can XRF, that you can fire assay. It sort of comes down to, I want to say met testing, but
No,
it's not metal, but it comes down to
it's
testing.
performance. It's all performance related.
Yeah. Okay.
Yeah.
Okay.
So it's extensive testing, and
Yeah.
the thing is, every company that you talk to wants to do its own testing, even though you've done it yourself. And so
Mm.
it, getting interest does take a long time.
Okay. Well, the CS Pozzolan project, then, let's talk about this. So, first of all, I mean, where is it in the world and what's it like on the ground?
So the CS project, as you can see from this illustration, it's located near the town of Tonopah in really south central Nevada. So in terms of access, it's right next door to in fact, a county maintained road goes through the deposit area. But and then it's 9 miles from the highway. So, the markets that we're looking at for this project are in Southern California, the Los Angeles basin, or Southern Nevada, Las Vegas market. So it's, California is one of the most populous states in the US. So large cement demand, large cement production.
Okay.
Whereas, the alternative fly ash material from coal-fired power stations is all coming from the central US or
Okay.
eastern US. There are no coal-fired power stations in this area to provide an industrial pozzolan.
Okay.
And of course, that fly ash is diminishing anyway.
Exactly. So the deposit is located like not very far from main roads, and of course the markets you want to or that would be looking to buy this, and also it looked fairly flat from that first picture. Infrastructure on site in terms of power. What's the situation?
Yeah, we have power going right through the site.
Okay.
The deposit itself is at surface, so it's all open pit mining. What we're looking at, this material, the perlite and the pozzolan, they're both volcanic materials. So they form in what are some fairly geologically recent volcanoes, about 7 million-year-old volcanoes. And these are materials that have been spewed out of these volcanoes. So they are ash deposits and coarser pyroclastic, what we call pyroclastic materials. And the key thing about both pozzolan and perlite is that the volcanic materials never crystallize, so they were quenched quickly. They make a glass, so they're essentially very glassy, so they're not crystalline. And it's that glassy characteristic that makes them reactive when mixed with lime and water.
Okay. And at the moment, how much do you understand of the project here? So looking at that aerial view, you've got sort of two zones. How well is the area understood and mapped?
Yeah. So the main zone and the tough zone have been drilled. So we took this from early discovery when there was no pozzolan known in this area. We took it from that early discovery through to sampling, drilling, delineation of the deposits, and which allowed us to come up with a mine plan. So we did that for the main zone and the tough zone. And within those two zones, that's where the mine plan's based. In the first 10 years in the main zone, I think the last 4 or 5 years in the tough zone within our mine plan. But there's this huge area called the northeast zone, which we've only got 2 drill holes in so far, but we've got very, very thick intersections of pozzolan in those 2 drill holes, and at the surface it covers a wide area. So we think there's probably at least as much material in that zone as in the other 2 zones together.
Okay. So that's a landscape shot now of that main zone. So the mounds there, that's what's naturally there.
So they're natural, yeah. So
deposit.
what you're seeing there, you can see there's these little hills in the main zone, and the darker material that's capping these little hills, that's perlite. So it represents a slightly different depositional environment from the pozzolan, which sits below. But it's the perlite capping on top of the pozzolan. But the perlite markets we didn't talk really much about the perlite markets, but the perlite markets are pretty static. They've actually declined a little bit in the past couple of years because a lot of the perlite was being used in the cannabis industry during COVID. There's a lot more cannabis consumed than is the case today, as you might imagine. And so that horticultural grade market has dropped off a little bit. And because the marketing of perlite is more intense in terms of a large number of very small producers or consumers of perlite throughout the US, we've really focused on the pozzolan for this project in more recent times, and particularly so because the perlite itself can be used as natural pozzolan. So it has the same pozzolanic properties as the rest of the pozzolan.
Okay, so it can be used for the same purpose, but it's just more perhaps suited to the other market, the horticulture market. But if there's more economic viability doing it to the construction industry for cement, then that's the place to go.
That's absolutely right, yeah.
Okay. So it looks on this picture then fairly straightforward. I mean, it looks fairly flat. There's sort of roads that go up to it. Is it just a matter of sort of scooping material up? There's no blasting to do, is there?
It's exactly that. This material is free digging, so you probably use a bulldozer to scrape it from the surface. You would strip off a few inches of the topsoil and stockpile that for later reclamation. But it's free digging. It's surface. There's no waste to strip until you get down to sort of several years into the mine plan.
Right. Okay. So this deposit goes quite deep then. I mean, I want to talk about that mine plan.
It goes down to we've drilled it down to 100 feet so far.
And it's open.
It's deep. It's at surface. It's very easy to mine. Very cheap to mine, and I think that's the key here. There is a transport cost involved from this material down to Los Angeles or to Las Vegas. So there's a significant transport component to the delivered cost, but that we are blessed with the fact that this will be really, really cheap to mine.
Okay. And this is this tough zone, which is the second phase, if you like, of the mine there. So is that more challenging?
That's correct, yeah.
Hilly there or mountainous there?
Slightly more compact than from the main zone, but still mineable without blasting.
Right. Okay. Excellent.
We don't. In reality, we don't think that we will mine in the tough zone for years and years and years. I know it's in the second part of the mine plan at the moment, but the northeast zone has so much potential. It's flat. It's it's very accessible. It's free digging. We think that as we start mining in the main zone, we'll start drilling out the northeast zone, and it'll be years and years before we got to the tough zone.
Okay, so the mine plan that's been currently done then, I think I'm right, it's about a 27 years life of mine, is that?
27-year mine life, yeah. Mining initially 100 in the first couple of years, 100,000 tons a year, and then moving up to 500,000 tons a year, which we think is a kind of a good scale of production.
Okay.
And you could see in that last slide the northeast zone, the extent of it, and the size of it, the two holes that we've put into that zone already. None of this is in the mine plan at the moment, but the mine plan can be amended.
Okay, so the mine plan includes which zone then? Just the main zone?
The main zone and the tough zone.
The main and the tough, right? Okay.
Yeah, it doesn't include this at the moment simply because we hadn't drilled this out at the time we did the mine plan.
So would you look to adapt that mine plan to be the main and the northeast zone and sort of have the tough, because you say it's not
in due course, but we don't need to do that for a few years. after the mine starts.
Okay. So the mine plan enough with the main zone as the first places. Let's just go through some of those metrics then. So you've got the 27 years life of mine there. I know that's for the main zone and the tough zone. What was it giving back in terms of? Did you talk about economics? Did it talk about capex to get started, that kind of thing?
Okay, so there's different production scenarios available here. There is the potential to actually just dig it up and ship it out to someone else who is, going to then grind it. And one of the scenarios is we ship this to a cement company. That cement company will mix it in with their cement clinker when they grind the cement clinker and make a blended Pozzolan cement. So very low capex. It would just be a contract mining operation. The other option is that you set up a dedicated grinding plant, because the Pozzolan has to be ground very, very fine to be reactive. So you're talking about grinding to 10 or 12 micron average size. So the plant to do that, if you built a plant that was do 400,000 tons a year, you're probably looking at $30 to $50 million in capex.
Okay.
So it's that sort of scale. It's not a hundreds of $1 million plant. It's in that $30 to $50 million range.
Yeah.
So, but what that does, it then opens up the market to all the ready-mix companies as well as the cement companies, who would buy this material instead of fly ash to make their concrete mixes with lower embodied carbon.
So the mine plan effectively talks about, those two options. So either, I don't know if you call it a direct shipping, DSO, for example, but basically selling the material straight away, just digging it up and selling it on, or indeed building a 30 to 50 million pounds, I guess, processing
dollars,
dollars, on site and processing yourself. So, what's the preferred option?
So it would just simply be contract mining. So we bring in a contractor to mine the material, load the trucks, and off they go. And so the contract mining quotes that we've had so far all come in at less than $5 a ton.
Right. Okay.
So very low cost.
So you're looking there at perhaps being able to make a margin of what, $135 on the ton then?
No. So the mining costs $5, then you've got the transport costs down to market. So the cement might sell for 140, but the natural pozzolan competing with fly ash sells for say $100 a ton. The transport cost can be a major part of the delivered cost. We're not talking about, or we're not disclosing what transport quotes we've had, because that's it's part of our competitive information. But we do see very good margins on a sale price of 100.
Okay, you say good margins on a sale price of 100. So it's economically viable on a sale price of 100, is what you're saying?
We believe so.
Okay. And at the moment then, where are you at with it? So I think I am right in understanding. So you've got a good idea of what's there, but you've also had samples that have gone to testing with some local companies. So is that quite important to sort of see how good this pozzolan is and actually?
Yeah, I mean, a lot of that work has been taking place over the past few years and continues. And really what we're trying to do is to, we've talked about our preferred option, but the other option is that someone else comes in and funds that through either a joint venture, or they come in and buy the project. So, we're talking to people about a different rate, about a different range of possibilities. And, at the moment, we have to get this over the line with one of those sort of arrangements. And, we haven't done that yet, but we expect we will be able to. And, I think, if we look at what's been happening in our other Pozzolan project, I think that kind of tells a story about how long it takes to get these projects up and going, and how the talks that we've been having with companies have been going on over a period of time, over quite a long period of time. But we've brought that to fruition on our Hazen Pozzolan project, which is another Pozzolan project, less well developed than the CS project. So if we talk just to kind of continue that, really, the Hazen project is targeting the Northern California and Northern Nevada market, so it's somewhat complementary to the CS project. But we spent very little on this project. We have just done some very basic work. So it's not been drilled at this stage. We don't know how much we have of the material in the same way we do for the CS project. But nevertheless, we've just done a deal there whereby we've signed an option agreement with a large industrial company, and they have an option to buy that for $800,000, 3-month option. And we've spent just over $30,000 on it. So it kind of shows the uplift that's possible on these things. But the company we're dealing with now on Hazen, we've been talking to them for over 2 years.
Okay.
And I think what that underlines is that the industry is very, very conservative. So although the industry knows that they have to decarbonize the cement, ready mix and associated industries, they are only doing it when they absolutely need to. And the pressure now is mounting, and we're seeing people make their moves. And this is an example of that. So, if you think this is an early stage project, which is under option for 800,000, that kind of by inference, it puts a much higher value on our CS project.
Okay.
And, gives a more of an indication of what we might be looking for that project. Yeah, it's just been very slow. And to some extent, we've been, quite early into the game in the rise of natural pozzolan. So, we were probably one of the first companies to take up land and to, do the work we did on our CS project. And it's now some of these big industrial companies are starting to catch up in their level of interest.
Okay, well, that's a positive sign then that you've got that option agreement signed. I mean, how much bigger is CS compared to Hazen then, just as a...
Well, we don't know because Hazen's not been drilled yet, but I would expect it to be smaller, but we don't know. And that's the work that the company will be doing in the next 3 months.
Okay. And okay, so that's what's going on.
We do. Yeah, so I mean, we have done a trial. Over 2 years ago, we did a trial mining exercise on this project, yeah, it was. So we've been working on it a while, but spent very little. That trial mining was funded by another company, yeah.
So ideally, are you looking, because I know your model is this prospect generator model, do you not really want to go into production on it yourself as the ideal thing to look for a partner, or indeed to sell it and retain some kind of right or royalty?
I think that would certainly be an attractive option. We need to, valorize some of our projects now rather than, kind of 2-3 years into the future. Our share price, because these projects, and particularly the CS project, has taken so long to get to the stage it's now at, our share price has suffered for that. So we have a fairly modest market cap of just over £1 million, which is not really very demanding when you look what the company has. And, I think the Hazen deal sets a benchmark for what is probably not considered a core project, where we'd only spent $30,000 odd on, but has the sort of value that's reflected in the possible option purchase price.
Okay, so just thinking then, what's happening the rest of this year then? So due diligence would be going on with the option agreement, so that would involve drilling and testing, and then they'd look to make a decision?
Correct.
Okay, good. And then you might look to tie in the CS project into that deal, maybe, or?
I wouldn't say that it certainly isn't tied into this deal at the moment.
No, okay. But the scope is there, or indeed, as you said, if you can get something sorted with Hazen, then CS is there as a much more advanced version of that project.
Correct. Yeah.
Okay. So do you see at the moment then, just finally, with this option agreement, are you seeing quite a renewed interest in this market? Do you see things starting to kind of accelerate for the market, but also for
we do, and I think it, as I said, it's the requirement for the cement companies to reduce their carbon emissions and the concrete industry. It's coming with pressure from all sides. It's coming from state legislation. It's coming from the specifiers who want to, have their projects built with, cement and concrete that has lower embodied carbon, and all that pressure is now starting to build, and that the cement and the concrete companies are taking the opportunity of natural pozzolan much more seriously. So another example of that, I guess, is in Utah. There's a company that basically took the route of the second option we've looked at for CS, which is to build its own plant. So they did that, and I mentioned earlier on, it took them a long time to build the sales up. But and it was a private company, but it's now been bought up. The whole operation has been taken over by one of the big cement companies. So they've cashed out of that, and that sort of move, is pretty clear evidence that these big cement companies now are starting to see the opportunity and to set their positions in the pozzolan opportunity.
Okay. Well, Patrick, thank you very much for your time today. Talking to us about your Pozzolan and Perlite projects. Thank you very much.
Thank you very much.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.